Hey everyone, welcome back to Corporate Decoder, the place where we expose the secrets buried in corporate filings, and today we're diving into the Target 2015 Fund's semi-annual report. Prepare yourselves because this isn't your average sleepy investment update. So what is the big story here? Well, this report from T. Rowe Price Retirement Funds Incorporated covers their Target 2015 fund, giving us a peek under the hood of how this fund performed and what it invested in up to November 2025. We're talking about a fund designed to grow and provide income, and this report is packed with numbers that tell us exactly how it is doing that. Before we dive too deep, if you are someone who likes to cut through the corporate jargon and get to the real financial story, make sure you hit that subscribe button. And hey, we've got a fantastic community over on Discord, linked in the description below, where we break down these filings even further. Now, let's talk about what it costs to have your money managed. For a hypothetical $10,000 investment, the investor class of the Target 2015 fund cost about $23, which works out to 0.45%. Not too shabby, but if you are in the advisor class, that same $10,000 investment would have set you back $36 or 0.70%, and for the I class, it is even lower at just $16, a mere 0.30%. So depending on which door you walk through, your costs can vary significantly. It really pays to understand the different classes of shares. Looking at the fund size, the total net assets landed at a pretty substantial $155,860,000. That is a lot of money being managed, and how many different investments make up this giant pool of money? It is holding 27 different positions. That suggests a fairly diversified approach. Now, how actively are these investments being managed? The portfolio turnover rate is 8.2%. This means they are buying and selling assets relatively slowly. A low turnover rate often suggests a more buy and hold strategy, which can sometimes lead to lower trading costs and potentially a more tax-efficient approach. Let's talk about where the money is actually going. The fund is heavily invested in domestic bond funds, making up 44.2% of its assets. That is a significant chunk. Following that, we have domestic equity funds at 26.5%, international bond funds come in at 16%, and international equity funds represent 9.7%. Finally, short, term and other investments account for the remaining 3.6%. So it is a balanced approach, but with a clear lean towards bonds, which makes sense for a fund aiming for both growth and income with a target date. Let's zero in on the biggest pieces of the pie. The top holding by a good margin is the T. Rowe Price Limited Duration Inflation-Focused Bond Fund at 19.5%. That is a big bet on that specific strategy. Next up is the T. Rowe Price New Income Fund at 17.8%. These two bond funds alone make up a substantial portion of the portfolio. Then we see the T. Rowe Price International Bond Fund USD hedged at 6.7%, followed by the T. Rowe Price Growth Stock Fund and T. Rowe Price Value Fund, both at 5.2%. The other top holdings are the T. Rowe Price Emerging Markets Bond Fund and T. Rowe Price Dynamic Global Bond Fund, both at 3.9%. Then we have the T. Rowe Price Hedged Equity Fund at 3.7%. The T. Rowe Price US Large Minus Cap Core Fund at 3.3%. And rounding out the top 10 is the T. Rowe Price High Yield Fund at 3.2%. What this tells us is that the fund heavily relies on other T. Rowe Price funds to do its investing, which is a common strategy for target date funds. Now for the juicy part, the financial highlights, let's look at the investor class. For the 6 months ended the 30th of November 2025, the net asset value per S-Share started at $11.56 and ended at $12.36. That is an increase of about 80 cents. The total return for this period was 6.92%. Not bad, especially considering it is for a short 6-month stretch. Looking at the ratios, the gross expenses before payments by Price Associates was 0.45%, and the net expenses after those payments remained 0.45%. This shows that any expense reimbursements from T. Rowe Price itself are fully reflected. The net investment income ratio was a healthy 3.43%. And that portfolio turnover rate we mentioned earlier, 8.2%, is right here. For the investor class, the net assets at the end of the period were $56,641,000. Now let's check out the advisor class. It started the period with a net asset value of $11.55 and ended at $12.34, a slightly smaller gain than the investor class. The total return here was 6.84%. The gross expenses for the advisor class were higher, at 0.70% and stayed at 0.70% after any reimbursements. The net investment income ratio was 3.23%. Net assets for the advisor class were much smaller, at just $1,242,000, reflecting its more specialized distribution model. And for the I class, starting at $11.55 and ending at $12.37, giving it the highest net asset value per S-hair of the three classes. The total return here was 7.10%. Here is where we see the cost savings really matter. The gross expenses were the lowest for the I class at 0.30%, and it stayed that way after reimbursements. The net investment income ratio was 3.61%. Their net assets were a substantial $97,977,000. This really highlights how class structure and fee differences can impact an investor's actual returns over time. Now, let's get our hands dirty with the actual investments. The portfolio of investments section shows us exactly what the fund is holding. As we saw in the allocation, bond funds make up a significant 60.2%. Within that, the T. Rowe Price Limited Duration Inflation Focused Bond Fund is the largest holding at $309,620 as of May 2025, and it is still the largest at $304,130 as of November 2025. The New Income Fund is also a major player, starting at $26,422,000 and ending at $27,735,000. These two alone are nearly 40% of the fund. On the equity side, which makes up 36.2% of the portfolio, the T. Rowe Price Growth Stock Fund is a notable holding, starting at $7,487,000 and ending at $8,042,000. The Value Fund is also significant, starting at $7,824,000 and ending at $8,021,000. It is interesting to see them holding both growth and value funds, suggesting a balanced approach to equity exposure. They also hold 3.7% in short-term investments, primarily in the T. Rowe Price US Treasury Money Fund. This provides a degree of liquidity and stability. This section on affiliated companies is really important. It details the gains and losses from investing in other T. Rowe Price funds. For instance, the T. Rowe Price Limited Duration Inflation Focused Bond Fund had a net realized gain of a negative $71,000 and a change in net unrealized gain or loss of negative $360,000. But it generated a significant $1,204,000 in investment income. This really illustrates the complex interplay within T. Rowe Price's own fund family. The total realized gain from these affiliated companies was $976,000, and the change in net unrealized gain was a positive $6,708,000. Looking at the statement of assets and liabilities, we see total assets of $155,948,000 and total liabilities of $88,000, resulting in net assets of $155,860,000. This aligns with the total net assets figure we saw earlier. The net asset value per share for the investor class was $12.36, advisor class at $12.34, and the I class at $12.37, confirming our earlier findings and showing how even small differences add up over time. The statement of operations for the 6 months ended the 30th of November 2025 shows net investment income of $2,752,000. This is after deducting expenses. The real story here is the realized and unrealized gains. A net realized gain on sales of underlying price funds was $976,000. And the change in net unrealized gain from these funds was a very impressive $6,708,000. This positive unrealized gain is a significant driver of the fund's overall performance. The total increase in net assets from operations was $10,436,000. Diving into the statement of changes in net assets, we see that for the 6 months ending the 30th of November 2025, the fund experienced an increase in net assets of $2,161,000. This is a result of operations contributing positively, but offset by capital share transactions. Specifically, shares were redeemed, particularly for the investor and I classes, leading to a decrease in net assets from capital share transactions of $8,275,000. This indicates that while the fund is growing from its investments, more money is leaving the fund than coming in through share purchases. Now, let's quickly touch on the notes. The fund is an open-end management investment company and invests in other T. Rowe Price funds. This is crucial to understand its strategy. The different share classes, investor, advisor, and I primarily differ in their distribution and service fees, with the I class being the lowest cost option. The fund values its investments at fair value, with investments in underlying price funds valued at their closing net asset value. Importantly, on the 30th of November 2025, all of the fund's financial instruments were classified as level 1 in the fair value hierarchy. This means their values are based on quoted prices in active markets, which is generally the most straightforward and reliable valuation method. This note on related party transactions is essential. The fund is managed by T. Rowe Price Associates, Inc., and it invests in other T. Rowe Price funds. This means that T. Rowe Price is essentially managing money that it then invests in its own products. The report states that the fund pays an annual all-inclusive fee which covers investment management and operating expenses, with the effective rate for the investor and advisor classes at 0.45% and for the I class at 0.30%. This fee schedule generally declines as the fund reduces its stock exposure over time, aligning with its target date approach. What is the takeaway here? The Target 2015 fund, managed by T. Rowe Price, seems to be performing adequately, with strong positive returns driven by its underlying investments, particularly the unrealized gains in its portfolio of price funds. The diversification across bond and equity, with a heavier tilt towards bonds, aligns with its stated objective. However, the lower net asset growth in the 6-month period, coupled with net redemptions, particularly from the investor and I classes, warrants attention. This could indicate investors are moving money out of the fund, potentially to other investment vehicles or simply withdrawing funds. The cost differences between share classes are significant and clearly demonstrated in the financial highlights, emphasizing the importance of choosing the most cost-effective share class available to you. While the fund is performing well operationally, the outflow of assets is a trend to keep an eye on. Alright, that is our deep dive into the Target 2015 Fund Semi-Annual Report. What are your thoughts on these numbers and what they signal for the fund's future and for investors? Drop your opinions in the comments below. If you found this breakdown helpful, please give it a like and subscribe for more in-depth corporate analyses. And don't forget to join our Discord community, linked in the description for more exclusive content and discussion. Thanks for watching Corporate Decoder. See you next time.